Namaskar and welcome you all to this webinar on understanding of different types of inter-branch and inter-subsidiary and different types of internal charge outs within the group. This is a very uh, disputed topic for so many years now, and from the GST has come. Uh, and this is actually been debated and discussed not only by the professionals but by various other fellow chartered accountants, fellow experts in GST, and also the department and also the different AARs and other discussions have come up in this matter with regards to the models that are being adopted by inter-branch and intercompany sharing. It is very common when there is a group of companies operating within the geography or one company having multiple branches operating within India, uh, sharing various services in a hub and spoke model, or sometimes in a model where each branch is decentralized and operating by itself and having its own P&L. Both the models are having their own nuances with regard to the model of GST, that is the SGST, CGST, and IGST model that we are adopting in our country, where each state has a share of GST, and there is a struggle that whether the adequate share is given to the state with respect to the GST or the value addition that the state is providing. So these arguments keep on happening with regard to various models. Today we have experts, that is CA Pranav Kapadia, who leads the GST team at APMH, has been president of GST Practitioners Association of Maharashtra in 2017 when GST came, and has been chairperson of the Indirect Tax Committee of the GST Practitioners Association of Maharashtra, the Chamber of Tax Consultants, and of course, leading GST and international indirect tax practice, that is GCC VAT, UAE, Saudi, Bahrain, Oman, and we do a lot of work in GCC countries with his guidance, and a lot of clients are benefited from his expertise in terms of various difficulties that they have been facing with regards to compliance, with regards to uh, taxability, with regards to the rates of tax, with regards to different types of transactions involved. Uh, Currently, also, we are discussing one of these difficulties that most of our clients have been coming across, that is applicability of ISD versus cross charge under GST. The ISD is the input service distributor model, and the cross charge is actually charging basis the value addition by each branch within itself. So both these models are going to be discussed threadbare today, and there would be a lot of circulars and notifications quoted with regards to changes that have happened over a period of time as GST graduated from being just a proposed act to a final act to a act which is today matured and collecting more than 1 lakh crores every month. So this is very, very important for those industries and customers with multiple branches and multiple group entities and interconnectivity between the entities and intercharge outs. It is almost like a mechanism of transfer pricing in the direct tax nuance, which has been actually discussed for so many years in this country, and still there is not a settled model adopted by anyone in the world. So this and with Pranav Kapadia, there is a very, very what you call professional chartered accountant, Koral Mehta. She's also more than 6 years post qualification focusing on GST and indirect taxes, and of course, global GCC VAT, which we practice in for so many years. And she's also a ex Big Four and has been doing a lot of interpretation, thinking, compliance, and representation in GST with APMH as well. So we have these two eminent speakers who will conduct the session. During the session, if you come across any questions, any doubts, or you have any comments or suggestions, all those are welcome. Be it from our clients, be it from any industry leaders, CFOs, CEOs of the companies, or from fellow professionals who are also following Pranav vigorously in various of his webinars and seminars. All are welcome. Only thing is, while the session is going on, please post the comments and questions in the comment box so that we can take them up as the time passes. The speakers can view and decide when they want to cover those questions, or they can be covered at the end of the session. But don't resist from sharing whatever comes in your mind while listening to this profound, thoughtful session on ISD and cross charge under GST. So over to Pranav and Koral to take this forward from here. Again, welcome you all for this seminar. We are very overwhelmed with your response and interest in this topic, and we will make full justice to what is expected from this session in terms of knowledge, understanding, questions, procedures, etc. Thank you. Thank you, everyone.
Yes, thank you, Mitesh, and welcome everyone on this webinar on ISD versus cross charge. Well, when GST came in, we all thought this is going to be a good and simple tax, GST. But the way things have got complicated and they are getting further complicated, I think we are, this complication seems to be here and stay here for a longer time. Although lots of efforts are being made by the government to clarify the issues through circulars, but every now and then we see some amendment coming in and the entire GST scenario, the compliance landscape changing entirely. And this is exactly now what is happening in the domain of ISD and cross charge. Well, ISD is not a new concept. It was there even during the service tax regime, Finance Act 1994. ISD, as we know, it is input service distributor. So whenever any company which receives services which are not related to their one particular place of business or their one particular location, and which is attributable to some other location, that needs to be distributed to the respective location. And that is what basically the entire concept of ISD is, input service distributor. So this was there during the service tax regime. Even under the GST regime, the concept of input service distributor had been borrowed from the erstwhile service tax regime, of course, with a few changes as applicable under GST, with all details and rules how it should be distributed. But the only thing was that this ISD mechanism was not made mandatory during the initial years of GST. And that is why there were many companies who were telling that since it is not mandatory, we may opt not to avail a ISD registration separately and distribute the credit thereof. Now, what has happened from 1st April 2025, ISD is becoming mandatory. ISD registration is becoming mandatory. And hence, we as tax professionals, the companies, the tax practitioners, all the indirect tax managers of each company will actually have to dwell into this aspect of how this mechanism works, what are the nitty-gritties of this mechanism, how it should be distributed, and what are the precautions that need to be taken while distributing this input service. Well, as regards cross charge, there is no definition of cross charge under GST. Cross charge जैसा कुछ है ही नहीं. There is no word in the entire GST law as what is cross charge. It is a terminology, which has evolved in the GST regime. Well, those who have been into VAT and excise, they know that whenever there is a branch transfer of goods, then that for that stock transfer under the VAT regime, if you remember the VAT regime, under the VAT regime, the goods could be transferred from say Mumbai branch to Ahmedabad branch in Gujarat against Form F, for which no tax was payable under VAT, and then the branch at Gujarat would further sell those goods. So this concept of, and if the F form was not received, the tax as applicable on those goods would become chargeable. As far as excise was concerned, every unit from which, say, there was one excisable unit and the goods, manufactured goods or any other goods are being transferred from that excisable unit to another excisable unit or to another unit, then there was a excise which was payable whenever that transfer was happening place. So let's understand, in both these scenarios, there is no third person involved. There is no outer person which is involved in this entire process. It is all happening within the same company. The company which has one single PAN, and it has multiple locations either within the same state or within different states across the country. So this concept in some way or the other was there. Cross charge was not there earlier. Stock transfer by way of branch transfer for goods even remains under the GST regime, and I think that is very clear. Whenever goods are being transferred from say one state to another, there is a GST which is applicable on those goods. So, and when, of course, when they are being transferred to their own branch. But when the services are being transferred, since there is no tangibility of those services are intangible in nature, so those cannot be identified, and hence there is always a challenge of how to value them, how to ensure that these services have been rendered, or whether should there be any value for such services, should there be a charge, because I am providing to myself. If I'm the head office and if I'm providing some services to my branch, or basically the question is that, am I supplying any services to my branch? Maybe not. It's just a function of my head office that I'm catering to while I'm providing certain inputs or certain support to my branches in other state. But since Schedule 1 of the CGST Act, it says that any goods or services which are provided without consideration between distinct persons, those are liable to tax or will be deemed to be a supply as per Schedule 1, even if they are without consideration. That is where this exact concept of cross charge has evolved. So, well, ISD and cross charge, these are the two terminologies. I just wanted to, lay down the foundation for this discussion. And now we have CA Koral Mehta with us, who leads our GST advisory and compliance team. And she will take us through the presentation. She will take us through all the provisions which are applicable for ISD and cross charge individually. And wherever my comments are required, I will chip on that. So over to you, Koral.
Thank you, sir. Good afternoon, all the viewers and the listeners.
Mic on खाली mic.
So here's a presentation of ISD versus cross charge. First, let's get into what was the basis rule of GST. GST is a destination-based consumption tax. It follows the destination where the goods or the services are actually consumed, and only where the consumption actually takes place, the GST revenue as well as the credit pertaining to that will be applied. Now the businesses have been expanding across India, within state, outside state. So there are certainly, they have common revenue as well as common expenditure among the central office. There is one central office generally, and then there are other offices which are branch offices or their factories or their retail outlets, etc. But the input tax credit should flow to the state from where the corresponding revenue is generated. This is where the concepts of ISD and cross charge come into picture. All the states as well as the central are entitled to a certain tax revenue for which we can set off the credit which we get. So it is important to understand the distribution of GST credit among all these locations so that the state generating revenue gets its share of ITC also. What is ISD? Generally, the head office avails certain input services which are used by itself as well as its other locations. Since the common expenditure is meant for the business of all the units, it is but natural that the credit of input services in respect of such common invoices should be apportioned among all the consuming units. So it is very common that there are many expenses like software services, warehousing expenditures, some security services, etc., which are centrally procured by one head office, and then it is used among all the locations across India. This ISD mechanism helps such proportionate distribution of services among all the consuming units. Let us understand with help of an example. There's a company ABC which has its head office in Maharashtra, and they have two factories in state of Gujarat and Rajasthan. Now they have procured software licensing services, and each of the three locations have installed these software licenses, but the vendor issues only one invoice to the state of Maharashtra for all the three software licenses it has procured, it has provided. Now the services have been used by all the three states, that is Maharashtra, Gujarat, and Rajasthan, but the invoices raised only in Maharashtra. Now here ISD comes into picture. Maharashtra has to take one ISD registration and distribute the credit which is pertaining to Gujarat and Rajasthan, and hence the states of Gujarat and Rajasthan will be able to avail this credit. This way, the consuming states, that is all the three states, will be availed ITC, and the Maharashtra, that is the state generating revenue, will be eligible only for the credit which has only itself consumed.
So just to add to what Koral mentioned, see, although we have one nation, one tax, right? But we know that our nation is divided into so many states and union territories. There is a central government, there is the state government, there are the union territories. Even at the time of subsummation of all the various taxes, wherein VAT was there, excise, the local state tax, there were so many taxes which were subsumed under GST, and there was a formula which was agreed to by all the states, that this much should be the revenue of the particular state which that state was getting at the time of subsummation into GST or subsuming into GST on 1st July 2017. There is a separate rule and law for that. That okay, the revenue of that state should continue. Now with GST coming, there is a seamless flow of credit. So it can happen that a software service provider will raise the entire tax invoice to the head office at Mumbai, and that is generally what happens. We are taking the example of Mumbai as a head office for all this discussion purposes, and say the states of Gujarat and Rajasthan, just for ease of our discussion. So if the entire credit of that software service, say there is a 1 crore rupee software expense which is incurred by the company, and the entire billing is coming to the state of Maharashtra, then the entire input tax credit flows to Maharashtra. It does not flow to the other states. And that is why this inappropriate or unequal distribution of input tax credit was happening. And that is why, since, as Koral likely mentioned, GST being a destination-based consumption tax, where is this software being ultimately used? This software is being used by the branch at Gujarat. This software is being used by the branch at Rajasthan. But the entire GST credit is coming to Maharashtra. And hence, these provisions of input service distributor are there. And that is why the basic of input service distributor. Yeah, Koral.
Coming to the provisions, as per Section 261 of the CGST Act, till 31st March, there was one definition, and the definition changes with effect from 1st April 2025. Principally, the definition remains the same. What is added after April 25 is that RCM is also included in that, and the focus is for on behalf of the distinct person referred to in section 25 having the same PAN but different GST numbers, and they will be liable to distribute the ITC in the manner provided in the section 20. Now, section 20 mandates the registration under ISD. So everyone has to mandatorily register under ISD as per section 20 from 1st April.
So basically, I think the change in the definition which has come. So there are, I think, three main provisions which we need to understand. One is the definition of ISD, which is given in section 2, subsection 61. Therein, although there was a mechanism to distribute the ISD, it mentioned only about tax invoices issued under section 31. It means all B2B invoices. There was no mention in the law regarding distribution of input service on account of reverse charge mechanism. Now, there are so many companies who are paying GST under reverse charge mechanism, say for security services, for transport services, say it is import of services. So many companies are paying on account of import of services. Having paid on that, there is no tax invoice issued. So how could that be distributed? That couldn't be distributed earlier. The provision has come in now to distribute such services from 1st April 2025, which has now been added or in the substituted provision. Yeah.
Yes. The Office of Business Location can become an ISD only if it receives tax invoices for on behalf of the distinct person. That is, consumption of supplies by distinct person and not the one who receives the tax invoices. In our example, the distinct person can be Gujarat and Rajasthan factories, and the one who receives the tax invoices would be the Maharashtra state. The examples of distinct person are the branch offices, factories, warehouses, retail outlets. Also, service outlets are included here.
One thing I would like to add here is that we have to keep in mind that whenever, because the way businesses are doing, if we check on any one company, we always see there are so many sister concerns of that company. There are so many associate firms or companies which are associated and located at the same location or multiple locations, and there are so many sister concerns. So when we are talking of ISD and cross charge, we have to understand that we are talking only of that one single entity only. There could be that one company, say company A, could be having a sister concern B, and it might be providing certain services to B. There might be some common services which might have been received by A, and then it may be charging it to company B. Okay, in both these situations, since company A and company B both will be having a different PAN number, let's understand today's entire talk in this webinar is not about such company A and company B. We are only discussing about a company A, wherein within that company A, there are separate GST registration numbers of that company. There are separate locations. And let me tell you, even if there is a branch which does not have a GST registration number, but that branch is also eligible for the input service distribution, although it may not be eligible for input tax credit in that branch because that branch is not registered. But in case if there is any branch which is providing any services, the law says that such branches should also be included while distributing the input tax services.
Important points over here are ISD cannot be a supplier of goods and services. It can only be a recipient of services for the sole purpose of distribution of their ISD among distinct person. Focus is on it should be under the same PAN. So there are input goods, there are capital goods, all such are not included under these provisions. Only services portion, that to the common services, are included under ISD.
And specific services if
Yes.
applicable.
if it is attributable to more than one location. And since it is under the same PAN, these are not even applicable to holding companies, subsidiaries, or group companies. Some examples of services are software services, communication services, courier charges, warehousing services, and security services. The list is can include many more, including depending on the businesses. ISD has to identify the block credits and ineligible credits and separately distribute them in the form. The form is form GSTR 6, and there are separate columns for mentioning the eligible as well as ineligible credits. So we have to correctly bifurcate into those two. ISD can also distribute the ITC on RCM payments.
Right. So I think so as mentioned by Koral. So so I think just let's understand how this mechanism works. So to distribute this ISD, a separate ISD registration number is to be taken. So apart from your normal GST, let's say company A is having a GST, a regular GST registration, and it has a head office at Andheri. Okay, and it wants to distribute through the ISD mechanism, then it will have to obtain a separate ISD registration number again at Mumbai at that place of business. As of now, whatever invoices are being, or whatever purchase invoices or inward supplies invoices are being issued, they are being issued in the regular GSTI number of that company A. Now, once the company identifies, okay, these are the particular services which are to be which are common or attributable to other branches also, then in that case the company will have to inform those vendors to issue their invoices in the in the ISD GSTI number of that company A. Okay, so there will be situations where the company A will be having two GST registration numbers. In the state of Maharashtra, we are taking this example, a regular GST number and the ISD GST number. And some of the invoices on that, the vendor's invoices will have the GSTI number of the regular GST number of that company, and some invoices, as the company informs to the respective vendors, will have to be issued in the respective ISD GSTI number. And as the mechanism of GSTR 2A is there, everybody is aware of GSTR 2A and 2B. Whenever the vendor fills their GSTR 1, the corresponding ITC is reflected in GSTR 2A and 2B of the recipient. Similarly, GSTR 6A is the corresponding form in which the GST ITC pertaining to an ISD will be reflected. Correct. So that will have to be kept in mind. So having done that, the mechanism would be that such input tax credit would come under GSTR 6A of the recipient of service. It's company A in our example. Okay. Whatever credit comes, the company will have to distribute among, say, it has 5 branches, 3 branches in our example, head office plus 2. So 1 plus 2, it will have to distribute all the 3 amongst all the 3. Now, as mentioned by Koral over here, regarding the block credits, say it is getting 1 lakh rupees of 3 lakh rupees of input tax credit, out of which 30,000 input tax credit is pertaining to ineligible ITC. Say it is pertaining to restaurant services, which are being, which are common, or maybe some other services, say health insurance services of all the workers which are there at all the 3 locations. I think that will be an appropriate example. So if those health insurance services are being obtained and being received at the head office, then both the credits, 3 lakh rupees of total ITC, out of which 30,000 is pertaining to health insurance, 2,70,000 and 30,000 both will have to be separately indicated in the GST return 6 of company A and distributed to all the branches, all the head office and the respective branches. That is what I think what is meant by distribution of the block credit. Yeah, Koral.
So there is Rule 39, which lays down the procedure for distribution of ITC by the ISD. So it is available for distribution. The ITC available for distribution in a month shall be distributed in the same month. So as sir said, some ISD credit ITC would be reflected in Form 6A. That credit has to be utilized and distributed in the same month. Also, there would be some invoices which we receive. Those are also to be distributed in the same month. ITC distribution shall not exceed the amount of ITC available. For a 100 rupee ITC available, the distribution amount is 100 or less than 100. We cannot exceed the amount. ITC of tax paid on input services attributable to a recipient shall be distributed to that recipient only. The main head office has to correctly identify the particular recipients who are eligible for receiving these services, and only those will get the ITC of such input tax credit.
I think here we can take an example. Say for the Gujarat branch, the company wants to take a ISO certification. And it is taking only for the Gujarat branch, it is not taking for the Rajasthan branch and the Mumbai branch. But the bill is coming to the head office at Mumbai. Because head office at Mumbai deals with all the, all these processes, and since it being the head office, the bills are issued from here. Okay, so now it is identified that this ISO certification for the Gujarat branch, for the Gujarat factory, or that office over there is to be attributed only to Gujarat. Then directly in the ISD, once first of all, the company will have to identify and take that ISD, that ITC in the ISD registration. Then from availing in that ISD registration, the company will have to distribute only to the Gujarat branch and not on proportionate basis to all the branches.
So there is a distribution mechanism of how we are going to distribute the ITC. If it is attributable to a specific recipient, it is very clear that the credit will only be given to that recipient. But if there are more than one recipients, for example, if we take example of one state in Mumbai and 5 states, and credit is attributable to all the recipients, all the 5 recipients, or the credit is not attributable to all, says only 3. So how are we going to distribute? There is a formula which says the credit attributable to each recipient would be directly proportional to the turnover of that recipient in that relevant period, divided by the total turnover of all the recipients during that relevant period, into the amount of credit which has to be distributed. Now the rule specifies the meaning of the relevant period. So for calculating the proportion, we have to consider the turnover of the preceding financial year if it is available for all the recipients concerned. But in some cases, we don't have the preceding financial year turnover. In that case, we have to consider the turnover of the last available quarter just before the month of the credit distribution. This has been specified in Rule 39.
Rule 39. Yeah. So I think the basis is that there has to be a pro rata distribution, and that pro rata distribution has to be based on the turnover of those respective locations wherein it is to be distributed. The complications start now. So as Koral mentioned, it is to be pro rata and it is to be based on the previous year's turnover. It is not current year's turnover. Okay, so that's fine. So if it is a simple case wherein, say now we are talking of the period from April 25 onwards, correct? ISD distribution from April 25. So for distributing ISD in the month of April 2025, the turnover for financial year 24-25 will have to be considered. Even in the month of March 2026, when the company is going to distribute the ITC, the turnover of financial year 24-25 is to be considered. That is to be kept in mind. The challenges start when there are additions and deletions to any of the locations during the financial year. Say in the previous financial year 2024, say in the beginning of the year, there were 3 branches, Maharashtra, Gujarat and Rajasthan. And say later on, sales depot were opened at Delhi in December 2024 and in West Bengal, say in March 2025. Then what will happen? Or say there is one more in Tamil Nadu. Say there are total now 5 branches, or maybe the Tamil. Then how to calculate the ratios? That is where the entire challenge is. So this distribution challenges come in such cases. Maybe where there was stability during the entire year, then it is okay. One more point of challenge would be, say, in the previous year there were 6 branches, but during the current year 2 branches have been shut down or 2 depots have been shut down. Then how to calculate? I think that is always mentioned in the rules. To just give you a small example, as just what Koral mentioned, if say we take with an example that in the previous year there were 5 branches during the entire year, and say in June or July 2025, a 6th branch is opened in the current year. So this 6th branch was not there in the previous year. Then how to calculate, how to distribute between the 6 branches? In the first 3 months, the distribution would have happened April 25, May 25, June 25. The distribution ratio would be based on the previous financial year's ratio of 24-25. Say we are taking an example that last year 5 branches were there. Each of the branches, including the head office, each of those branches were having a turnover of 10 crore each, 50 crore. So 1:1:1. So 20% each ratio was there. In April, May, and June, there is a credit of say 10 lakhs each, which is coming. So this 10 lakh of April will be distributed between the 5 branches, which were already existing last year, in the ratio of that turnover for the full financial year. Okay, so in April, May, June, that will happen. When we come to July, in July, there is a 6th branch at Tamil Nadu, which is open now. Now the rule will change. In between, अचानक से rule change हो गया. पहले 3 महीना एक rule किया, अभी now in July you have to again see the rule. Rule 39 क्या बोलता है? If in the previous financial year all the recipients were not there, then you have to see the previous quarter in relation to the month in which the credit is to be distributed. Say for the month of July 2025, the credit is to be distributed. Then you forget what was there in 24-25. You see April, May, June, what was the turnover. Based on that, you will continue. But still, I have a doubt, even though the rule says so, because in the previous quarter also, this branch was not there. So once only when all these branches are functional, July, August, September, then only maybe you will be able to rightly distribute the credit. So actually there are, various issues pertaining to when there are new branches coming and going. These issues are going to come up. We can discuss at detail, maybe otherwise we'll not be able to complete this entire process. But this is one point which I wanted you all to, to understand that there are issues in calculation of this ratio of the previous year.
There is no threshold limit for registration of ISD. Once you have identified that there are common input services that are to be distributed, it is mandatory that you get the ISD registration done. As per Rule 65 of the CGST Act, we have to file a monthly ISD return in the form GST. The due date will be the 13th of the following month. And the auto-generated statement of inward supplies would be available in form GSTR 6A. The issuance for distribution of ISD would be through an ISD invoice as per rules 54 and 54.1 and 54.1A. These rules also prescribe the provisions for issuing ISD debit notes, credit notes, and amendments thereto. These are in similar lines with our GSTR 1, 3B, and 2B. This was compliances part.
Correct. So for distribution of the input service, so like the example which we saw earlier, a normal invoice is being issued by the vendor. That invoice is coming into the ISD GST of this company A. Now this company A, Mumbai branch, is getting the input tax credit in its GSTR 6A through the vendor, say XYZ and company. Now this XYZ and company, which has issued this invoice, that is in the name of company A, GSTI in Maharashtra. Now Maharashtra will calculate the value of the ITC which is to be distributed between say all the 5 locations, and it will have to issue a separate ISD invoice to the respective 5 locations, including to itself. then mention it in its GSTR 6. GSTR 6 is similar to our GSTR 1, wherein the outward supplies invoice, like we mentioned in our GSTR 1. Similarly, in GSTR 6, the ISD invoices which will be issued by the company during that month will be mentioned, and those would fall into the GSTR 2A of the respective recipient once again. So this is how this system is going to work. So lots of compliances will have to be taken care of. Now, two more aspects of this: debit notes and credit notes. એ લટકણિયું સાથે જ હોય. ગુજરાતીમાં કહે ને કે લટકણિયું સાથે આવે, ઇનવોઇસ આવે તો ડેબિટ નોટ ક્રેડિટ નોટ ની ચર્ચા થાય જ. So it is something like that. Debit note, credit note are always an integral part of every invoice or every transaction which takes place. And in principle, ISD debit notes and ISD credit notes will also have to be issued. In our example, XYZ and company had issued the invoice in the GST ISD number of of company A, and say if it issues a debit note to company A, in pursuance of that, company A will again have to issue each of its 5 locations through the ISD mechanism. Similarly, if XYZ and company issues a credit note to the ISD registration number of company A in Maharashtra, then that ISD credit note will have to be issued by the GST from the GSTIN of company A in Maharashtra to each of these 5 locations, including the regular GSTIN of Maharashtra plus other locations in our examples. Okay, so all these things will also have to be taken care of. I know people are getting perplexed. Already 2A versus 3B is a big challenge for everybody. The challenge increases now with making more such invoices. Self invoices will have to be made for this and to be rechecked in our 2A once again. So this process increases. The time available is too short. The date is 13th of the following month. By 13th, the return is required to be filed. So GSTR 1, the due date remains at 11. For ISD registration, for the ISD returns, the date is 13th of the month. So every month by 13th, this will have to be taken care of, so that when on 14th, the GSTR 2B is generated, possibly this will get integrated into that and it will fall into the GSTR 2A and 2B of the respective company. And that is why this date is 13th and that date of downloading GSTR 2B is 14th. Yeah, Paul. Okay, one more thing, previous slide. Amendments. We discussed about debit notes and credit notes, but also there are amendments. There could be error while issuing the invoice. Like we have in our normal GSTR 1, if there is any error in any invoice which is issued by any supplier to its recipient, that amendment of that invoice is possible. Similarly, in case a ISD invoice is issued, amendment of the ISD invoice can also be done in a similar manner like we do it in our GSTR 1.
How are we going to distribute the tax? If the location of the ISD and recipient unit are in the same state, the nature of tax would be CGST, SGST, and it would be distributed as CGST, SGST. If it is different state and the nature of tax is CGST, SGST, it should be distributed as IGST. If the location of the ISD and the recipient are both in same and different state, few recipients are in the same state, few are in different state. The nature of tax would be ISD and distributed also as IGST and distributed as IGST.
So I think in the third example, we can just try to further clarify the third scenario which you just mentioned. So in the same state, if a company has 2 GSTIN number, then and if an IGST invoice has been issued by the vendor, since the input service has been received as IGST, say within Maharashtra, there is a regular GSTIN number, and say there is another business for which a separate GSTIN number of the same company under the same PAN has been taken by that company. We are having already such clientels who are having 2 GSTIN number within the same state and filing 2 GST returns within the same state, depending on the nature of business activity. Generally, that is not the scenario. We have seen majority of the companies, although they have multiple place of business in the state of Maharashtra, they file a single return for the state of Maharashtra. But maybe in a scenario, if they are having 2 GSTIN number within the same state, then even if within the same state, because in point one it is mentioned in the if the companies are in the same state, you have to distribute as ICGST, SGST, SCGST, SGST. But if it comes as IGST, it has to be distributed as IGST, even if it is within the same state. So this is the distinguishing point on this.
Before the ISD becoming mandatory, there have been case laws which have been traveled to AAR, AAAR, also high courts. One such would be Columbia Asia Hospitals Private Limited, wherein it was held that the corporate office and the branches are considered as distinct persons. The relations of employer-employee is limited between the corporate office and employees employed therein, and not between such employees and the other branches, thereby implying that any facilitation by the head office employees to the branch office will be exigible to GST, for which the fair market value shall include the employee cost. In this case, it is said that the employee cost has to be included in distribution to the ISD and the recipients. Whereas there has been a contrary ruling in Hitachi Power Europe. It was held that employees working at branch office and drawing salary from the head office are employees of the head office, and since the branch is an extension of the head office, there also exists an employee-employee relationship between the branch and its employees. Therefore, by virtue of Schedule 3 of the CGST Act, such transaction will be out of the GST. So in this case law, it has been ruled that employee-employee relationship cost will not form part of the ISD distribution. Similar to Columbia Asia, there is another supporting case law of Tata Sierra Airlines Limited, wherein it is held that applicant company procures various goods services directly used for air transportation services for all the states as its HO at its head office. Input credit pertaining to services only to procurement made by HO towards maintenance of aircraft shall be distributed by way of ISD, and credit pertaining to goods shall be distributed by way of normal registration.
I think I'll come to my comments on this case laws when we once we discuss cross charge, because I think here both ISD and cross charge both are getting involved. So this case laws I think I'll take up in the next when we discuss about cross charge.
So yeah, we have completed ISD and we have reached cross charge.
Actually, yeah. So we have completed what was to be presented in this few minutes about ISD. ISD. So we have just begun. क्या बोलते हैं just it's the just the beehive को अभी हमने touch किया है अभी that so there is so much to be coming out of it now.
What is cross charge? Cross charge, as sir rightly said, it is not defined in the GST laws anywhere. We have to rely on the common definition, the general parlance which goes around the industry. So to summarize, cross charge is a concept where the GST registration at the corporate office raises invoices on the other offices, being the distinct person. Here they have the same PAN with separate GST registration towards the services provided to such offices. Cross charge is a charge of tax on deemed supply made by the HO to its distinct entities. The deemed supply is defined under Schedule 1, which provides that supply of goods and services among distinct persons are liable to GST even made without consideration.
Even if made without?
Yeah, even if it is made without consideration. This talks about focuses on the Schedule 1, and here there is no return. In cross charge there are no returns, there are no formulas. It has to be valued by the HO to its distinct entities based on the services which are provided.
Correct. So I think so as we discussed initially. Yeah, you can continue. Maybe.
Yeah, it is the same.
Yeah, you can continue.
Yeah. It means the charge levied on distinct person by a distinct person. Thus, by the provisions as stated above, any supplies between different GST registrations of same entity without consideration shall be termed as supply and shall attract GST. And this would be called as cross charge. The bifurcation, the distinction between ISD and cross charge, that cross charge is about internally generated services, and essentially for charging cost of services which are used by branches, divisions, etc., having different GST numbers. Some examples of cross charge would be the IT department, the HR and admin support, the payroll processing, the branding services, the employee cost. Yeah. Before we go to valuation, sir would like to.
Yes, yes. So, so coming to the concept of cross charge, uh, first of all, a cross charge will be for internally generated services. We have a circular number 199, and it's a very important circular which had come in 2023. Which had come in 2023 before this amendment had come in July 2023. This circular had come. It's a very important circular, circular number 199 of 2023. Wherein for the first time the department had come out with a clarification what should be done, whether ISD should be done or whether a cross charge should be done, or what if cross charge is not done. So there were basically three questions which were clarified in that circular. Now, as we saw, input service distribution ISD mechanism was optional. So that was the first question in that circular, whether ISD was mandatory or was optional at that point of time, and the circular clarified that it was optional. Second, it mentioned that, okay, if ISD is optional and still the company has provided services, whether cross charge will apply. Now, what is cross charge? As per the examples which, yeah, as per these examples, say there is admin support, there is HR support, which is generally provided by the head office, the payroll processing, the accounting, branding services, all this, all these costs which are incurred by the head office, and the branch office is getting the benefit of that. It is those services which are given by the head office to the branch office. Of course, a very divergent view is the head office providing services to the branch office? Logically speaking, it is not, because it is just doing its sovereign function of supporting its branch office. It is the same PAN, only because of separate GST registration number as required state-wise as per the GST law. The company has taken separate GST registration number. Otherwise, it would not have taken a separate GST registration number itself. And everything, if it was really one nation, one tax, everything, all the services would have been provided from, or all the, compliances would have been done from one state only. Nonetheless, moreover, Schedule 1 specifies if such supply of goods or services are without consideration, because the company does not charge. I will not charge to myself, because I myself am the company. It is in my own PAN that I am registered in Maharashtra. It is in my own PAN that I am registered in Gujarat. Why will I charge to myself? The entire problem is arising because of that Schedule 1 Entry 2, which says that any supplies of goods or services between distinct persons or related persons, even if without consideration, shall be deemed to be a supply. Once having deemed to be a supply for a consideration, then come the valuation rules. Rule 28, Rule 27, 28, 29, 30, 31, 32. All those rules are there. All those rules come into play, and especially Rule 28 is the main rule which comes into play in such cases, that how to value such goods or such services. So the point is that in simplicity, cross charge would not have been necessary, but because of this Schedule 1 Entry 2, cross charge has become a necessity. Because of a distinct person rule, cross charge has become a necessity. Fair enough. Rule 28 gives the valuation mechanism, because I may not be knowing what should I charge to my own company. I don't want to make any profit out of it. I don't want to charge it. It's just because of this compliance cost or this compliance factor that I have to cross charge. Okay, then there are the valuation rules 27, 28, etc. Rule 28 is the main rule which applies. In that Rule 28, there is a proviso. That proviso says that in case if the service recipient is eligible for full input tax credit, then in such case, whatever value is charged by the supplier will be deemed to be the value of that supply. So in normal cases, wherein say the branch at Mumbai sells only taxable goods, the branch at Gujarat also sells only taxable goods, whether whatever you charge in the invoice, all these services, support services which you are giving to your other entity, it will be allowed. In the sense, there will be no question on that. Since the recipient is eligible for full input tax credit, no issues. Then, what if the recipient company is not eligible for input tax credit? Say the company is dealing into taxable goods as well as exempt goods. We have seen so many such companies which are dealing into both types of goods. There they are not eligible for full input tax credit. Okay. Then the valuation processes will have to be followed diligently by the companies. Second, the ITC, since it is not eligible, will become a cost to the sister concern, or not to the sister, to the own company in the other state. So that ITC becomes a cost in such cases. Say in case of a company which is into real estate, it has a company at Mumbai, and say this in the same distinct person it has at Gujarat, and it is supplying services over there. Then in such cases, since they are not eligible for full input tax credit, that will become a cost over there. So of course there can be other means. Okay, we may not keep by way of planning. We may keep separate companies for that state. That case possible in case of real estate companies. Maybe there you have a separate company. But in case if it is not there and that is the existing scenario, then such ITC becomes a cost to the recipient. Then all the rules as applicable to the valuation that will become applicable in such cases. So yeah, this circular plays a very important role. What is to be included in the value of services, what is not to be included in the value of services. I think Koral can just take us through the important points of that circular.
Yeah. I've summarized the circular. The value of services for cross charge at first instance shall be the invoice value only. In some cases where the invoice value is not applicable, then we have to take the open market value. Further, in cases where full input tax credit is available to the recipient of the cross charge services, the value as charged in the cross charge shall be deemed to be the open market value. If the HO has not issued a tax invoice to the branch in respect of any particular services been rendered by the head office to the branch, the value of such services may be deemed as nil by the HO to BO and may be deemed as open market value. So the circular has given certain leeway wherein the head office can value certain services, can deem it as in respect of internally generated services by head office to branch, the cost of salaries of such services is not mandatorily required to be included while computing the taxable supply, even in cases where full input tax credit is not available to the concerned BO. So the cost of salaries of the head office, the employees which are working for all the locations across India, their services, the cost of the services are not mandatory to be cross-charged to the branch office.
So I think this is a very, very important concession given by this circular. Earlier there was an issue, especially that now I come to that AAR, triple AR of Columbia Asia Hospitality. That was the first advance ruling on this subject, and wherein the advanced ruling authority had given a ruling that employee cost should also be included while doing a cross charge. Now, say a director of a company, a CFO of a company, is he working for the head office? Is he for the branch? How to allocate his salary and the salaries of such CFOs, such highly paid directors? It is very, very difficult to identify how that cross charge would happen, and there was lots of chaos in calculating the value of cross charge in such cases. And a much wanted relief has been given through this circular 199 that the value of employee services, the cost of salary of employees of the head office is not required to be included while doing a cross charge. Now, this concession, of course, as we have seen, as per Rule 28(2) proviso, where the recipient is eligible for full input tax credit, there was no issue. Whatever value you put, that was acceptable. The problem comes again where the company is providing exempt supply or where it is not eligible for full input tax credit. In such cases also, this concession has been made available and clarified by way of this circular. So it is a sigh of relief for most of the companies.
Further, there are no separate returns in case of cross charge. The location receiving the tax invoice can avail the ITC basis reflection in the GSTR to be like our normal input services.
It's like a normal return that we have to
Yes.
file.
Further, how do we distinguish between ISD and cross charge? So there are some points, distinguishing points. First is the IST pertaining to common input services received by the branches but invoices issued in the name of HO. In such cases, the invoices in the name of HO are required to be routed through ISD. But the internally generated services are to be covered under the cross charge mechanism.
So I think the example, we can take this example like the software services, where the software which was, services which were availed by the company A for all its branches of Mumbai, Gujarat, and Rajasthan, that was through the ISD mechanism. Now there could be a situation where the company, the head office at Mumbai is actually providing services of information technology to its other branches. Now we take a scenario of there are so many companies, which are coming together through merger, acquisition. There are hundreds of mergers and acquisition or thousands of merger acquisition happening. Some existing companies taken on by another person, amalgamated, merged, demerged. So many things are happening. So it is not always necessary that, like a normal company, that the same pan wala hi company hai, to sab, everything will get aligned. And we have seen so many such cases, where there are different entities which are merged, and that entity is a standalone entity within the entire single pan of the company which is filing the IT return. So such things are possible, and there could be a situation that, that say the company in Gujarat was a demerged entity from some other entity, and the company A has taken over that demerged entity. Company A was functioning as routine, plus it is having one more. There could be situations where that company in Gujarat, all the payments, the incentives which are applicable are made applicable only qua that particular location only, and all profits, losses, cost centers are to be borne by the manager of that company, of that branch, or whomsoever is the head of that branch. I'm just trying to give that example because there are so many such situations which are arising nowadays in this complex world. So there can be a situation that this software is bought actually, by the head office, the same example, and the IT support services are being provided by the HO to its branch at Gujarat. Then it will be a cross charge, and then it will not be an ISD. So within the same example, there could be a variant based on the facts of each case, and that is where we have to be very careful.
ISD is primarily for the distribution of credit pertaining to services received by the HO, whereas cross charge is for distributing the services which are charged by for the cost of support services provided by the HO to the other locations while consuming various goods and services for providing such support services.
Absolutely.
So the action forward would be, once you have identified the requirement for getting a ISD registration, you have identified the transactions, and if it is applicable, we have to get our ISD registration mandatory registered by 1st April 25, and further continue doing all the compliances related to it. We have to give the ISD registration number to the vendors so that they mention that that particular GST number while filing their GSTR1 returns, so that we get the credit correctly, and then we can distribute among the.
And in this era of e-invoicing, the e-invoice on 1st April has to be correctly generated in the correct GSTI number to which the credit is to be passed on. So I think that is very, very important. So I think the biggest action forward is first to identify whether ISD registration is required to be taken by the entity. If yes, inform the respective vendors that from 1st April you need to provide your invoice. Your e-invoice is also in this particular ISD GST and only. I think that will be the first and foremost thing. Of course, having identified what is to be taken under ISD, I know there are many companies and many of our close friends and clients are also there over here, and somebody have already informed me, हमने तो already arrangement कर दिया, हमने सब हमारे vendor को बोल दिया गुजरात का invoice गुजरात में भेज दो, महाराष्ट्र का invoice महाराष्ट्र में भेज दो. Okay, if that can be done, fair enough, but I think that has to be done. The company will have to identify, make list out which are the invoices where they have to take it, and even after doing that, what will happen to the auditor services, statutory auditor? वो तो मल्टीपल बिल नहीं दे सकता है, उसको तो ही इज डूइंग वन ऑडिट ऑफ द एंटायर कंपनी, उसके लिए तो लेना पड़ेगा. आई डोंट नो वेदर द स्टैट्यूटरी ऑडिटर विल से दैट ओके फॉर योर 5 ब्रांचेस आई विल इश्यू 5 सेपरेट इनवॉइसेस. I don't think so that can happen. For a company doing GST registrations, I mean our GST return filing, we can issue, or somebody can issue multiple invoices for each of the registration, and try to minimize the ISD related compliances. But yes, that needs to be evaluated and that needs to be identified at the earliest.
Yeah. So that would be it. In case anyone has any questions.
Accounting and GST, I think that
Yeah.
one more.
The accounting and GST software has to be aligned for this change. So whenever we are receiving and or we are providing end of the GST, the number for matching in 2B and 6A respectively has to be changed in the software as well.
Correct. So, and
for invoices raising.
Correct. So even if our vendor, suppose even if our vendor is, is his software will also have to be changed. And
Yes.
It is so difficult sometimes to get amendments in the software to put a particular master once again and change the GSTN number. And some softwares may not allow 2 GSTN simultaneously of that same company. So, so at both the end, whether you are a vendor, so even if you are a vendor and your customer says that they require 2 separate GSTN number to be mentioned on the invoices, your company will also have to take care and modify the software and give instructions to your team, who will be issuing those invoices, to do it accordingly. So that care will have to be taken both whether you are a vendor or whether you are a supplier.
And one more, the monthly GST returns and compliances and accounting of the ISD entries, that would also be very.
That will also be there. Yes, that would also be there. Yes, that will also be there because that accounting will also have to be done separately. We have seen companies struggling with the accounting. There is more accounting. I think we have almost come to an end of our presentation. Still, there is lots more to talk about on this ISD and cross charge. We have been able to touch upon the important aspects. Of course, I know there will be many other aspects, many other practical points coming along when we actually try to implement this ISD and cross charge. In case if there are any questions now, we can take away. In case any of our clients who are already there on this and they would like to schedule a meeting, we can have a separate meeting for that and discuss the way forward. This is just a curtain raiser to let everyone understand the complexities and the compliance is involved. Of course, some things if they can be streamlined and simplified, that can be also tried. And in case if it is to be done, the methodology thereof needs to be identified by each of the companies. So thanks to each one of you, those who have taken out time to participate and attend this webinar on ISD versus cross charge. Thank you, Koral, for making a nice presentation and explaining the provisions. Thank you, Mitesh and Team APMH for being with us always on each of these important topics for sharing the intricacies involved with all our near and dear ones. All those who have joined, and some maybe not been able to join, but yes, I'm sure we will catch up with them one day or the other. And we have also sent through email through our GST Mitra the nuances of ISD versus cross charge. It is also there now on our website www.apmhconsulting.in. And in case if still there are any questions which you want to ask now, we'll be happy to answer them. And in case if something you want to ask later on, that can also be done. So once again, a big thank you to all of you for being with us and having a very patient hearing. Thank you very much.
Thank you, everyone.
Over
Thank
to
you
you, Mukesh.
everyone for being here. Pranav, Koral has done amazing job in terms of explaining the concepts and nuances, nitty-gritties. This is a very deep topic for everyone to understand, not only to understand, to make your team members, your seniors, your juniors, your CEO, your directors understand this. I am sure they will get even more confused because this is very technical in terms of understanding capabilities requirement. So there will be a lot of effort required from everyone to do the explanation to everyone. Number one. Number two, there will be a lot of hard work required to get it implemented from the vendors, customers, and colleagues in the organization. So this is actually requiring preparatory trial and error before you actually get into the real activity. So we would recommend that you uh, do read the blog, understand the video. We will again share the video online on our YouTube channel of APMH Consulting. So please look at that. Please share the video with relevant people. Please also ask questions if you face them after this webinar. We will be very happy to handle those questions via private discussions or meetings or emails. And I'm sure this also will pass and we will be able to implement this ISD registration requirement and we'll be able to sail through. I remember when GST came, everyone was struggling with what will happen to GSTR 1, what will happen to GSTR 2A, 2B, and then 3A, 3B. Everything was passed through and there was 3B, then there was 2B. Now we are slowly seeing the sunrise of 2A coming back. So this circle is going to get completed today or tomorrow. But everyone adopted, learned, systems also evolved. So everything will evolve. Team will also evolve. But one has to work hard to do the what you call the information sharing or explain what is required to be done to the team members. So please use this material for the same. We will also try and circulate the PowerPoint presentation to whom it is required. So please DM us, directly message us if you need the PowerPoint presentation. Thank you. Thank you, everyone.